Welcome to our weekly Forex forecast, and this is for the week of November 30th to December the 4th, 2020. Just a quick disclaimer here before we get started. This is for educational purposes only. Trading is a risky business, so please be careful with your money. As usual, we'll start off by taking a look at our calendar here. Okay, so coming up Actually, so just bear in mind, we are going into month end here on tomorrow. On Monday, we are into month end flows. So month end flows can be the opposite of normal flows. So watch out for that. And also we have thin liquidity in the market right now because of the recent Thanksgiving holiday in the US. So liquidity was down a little bit, which means we can see some exaggerated moves because small orders can move the price. So just bear that in mind. Other than that, overall a picture, we are looking at a growing concern in regards to the coronavirus. We have seen, or the number of cases have been increasing. Now, the vaccines are going into further studies because all the vaccine studies that were done on a group of people that was less than 100. And that is not a big enough data site. So now they're doing independent studies basically to confirm the findings for those vaccines. But the chances of the vaccine actually being available for mass distribution prior to March, April, that's pretty slim. So in the, excuse me, in the meantime, we are likely to see an increase in the number of cases around the world, and which means we are likely to see more restrictions put into place. And when there are more restrictions, that means it will have a negative impact on the economy. So the stock market is disregarding the negative impact. However, the problem will be we are likely to see an increase in the number of layoffs and more people looking for unemployment. Some of the programs are going to end, which they will try to extend. So overall, basically, there is going to be a bit of a downside here in reality. So we'll see how the stock market reacts to that. But right now, the stock market is happy about the vaccines that have come out, and also overall, the stock market is expecting basically a little bit of a downturn, and then things to go back up again. So this is why we are seeing an increase. So everything is looking positive right now. The transition from Trump to Biden is on track. So all of that overall has had a positive impact on the market, but just be mindful because we may start seeing other negative impact like debt defaults and things like that that will come up in the next few months that we'll have to be prepared for. All right, so that's just an overall view of stuff that's outside of our news. So in terms of our news here, on Monday, we have OPEC meetings. This will be important here for oil and Canadian dollar. So the problem is going to be a conflict. If there is conflict within OPEC countries in regard to production cuts or anything like that, that will have a negative impact on oil. But if they come to agreements around, around the production quotas and things like that, and they are expecting positive revenues in terms of oil and positive price, then we're likely to see that optimism result in a higher prices for oil. So that we'll just keep an eye on the comments as they come out. Now, we also have PMI numbers and home sales and numbers here out of the US on Monday. There are also Eurogroup meetings here, and ECB President Lagarde will be speaking. Now, in this here, our biggest concern right now would be Brexit. So not just the Eurogroup, so two things actually, I should say. The number of coronavirus cases. So we have seen a number of coronavirus cases go up around the world, but in regards to Europe here, a number of cases have gone up and shutdowns are in place. So if we see negative comments or negative expectations in regards to the economic output in the next coming months, or we see a concern expressed in terms of what impact this will have, the pandemic will have on the economy going forward into 2021 and potentially 2022, that could have a negative impact on the market. Now, if ECB says they are going to continue to support the economy, they will continue to provide funds, that will be positive for the stock markets, because as more money flows into the businesses, stock market does better. So those are some of the points we'll have to keep an eye on in terms of the comments that come out. Okay, the PMI numbers here are not looking too bad in terms of expectations. Now, we haven't really seen, excuse me, any sort of mass lockdowns in the US as we have seen in other parts of the world. So in that regard, the numbers are normal here. So if the forecasted numbers match the actual numbers that come out, then that should be good for the US dollar, more for the stock market actually. Than the US dollar so much, because the money will flow into the stock market. Right now, stock markets are at all-time highs. So any kind of positive numbers will provide more fuel to the market expectations for the stock market. And then we also have cash rate statement here at this point. Reserve Bank of Australia not looking to cut rates. Now, the thing that we'll have to pay attention to will be their comments again. So if they express concerns in regards to the economy into 2021, that would be negative for Australian dollar. But if they say things like they're going to continue to provide support, and they are positive that Australia will come out of this, so all of those type of comments are positive, and we can see Australian dollar go up as a result of that. We also have a bunch of PMI numbers here from the Eurozone. So again, the numbers, the expectations are not too bad compared to previous numbers. So if the actuals match these expectations, we should see Euro hold up pretty well. And then, of course, we have PMI numbers from US, but also we have Fed Chair Powell speaking here as well. He'll be testifying in front of the Congress there. So with this one, again, the concern would be, what is Fed thinking? Now, Fed has provided a lot of support, and they have been requesting that the government provide fiscal support. So they've been basically putting the ball back in the court of the government. Now, with what's going on currently, there's no way we are likely to see any sort of package before the transition to the new government. However, even then, because of the way the House sits right now and the Senate sits, we're back into the way things were prior to the elections. So I wouldn't expect a big package right in January. I think there will be a lot of back and forth here, and we'll see. The concern will be some of the assistance programs or assistance programs that are running out, and if they can extend them. If they don't extend them, that will cause problems, and then we are likely to see more layoffs. We're likely to see more people just rolling off of the employment benefits that they were receiving and actually not having money. That could cause a lot of problems. Hopefully, that will not be the case. But again, it will be important for us to keep an eye on what's coming, what comments come out in regards to that. So that's the Fed at this point is not likely to. They're not likely to provide a ton of extra support. It will be more than saying, yes, we will support as needed. All right, so we have both ECB and Fed here. So Fed members basically, Fed also said that they're going to hold the interest rates low for till 2023, which is a really positive sign for the stock market, because when the business can borrow funds at low rate, they do well. So then they can have all these really low interest rates are so low right now, they can actually create a positive return for themselves without putting in too much effort. So that's what the stock market is really excited about, and that's why we have seen, or one of the reasons we have seen stock markets go up as well. And the Fed is likely to continue on with that type of statement. All right, so we also have RBA Governor Lau speaking, which will be basically just more of what was said in the RBA statement. but his comments again can move the market, so we'll watch out for them. GDP numbers for the quarter for Australia here, they're supposed to be better, and if they are in line with expectations or better than what the expectations are here, then we're likely to see Australian dollar go up. And of course, on Wednesday here, we do have more Fed members speaking. Again, it will just be the commentary. We also have ADP non-farm payroll numbers here. So this is the payroll week. So payrolls, this is likely to move the market. If the numbers are positive, that will be a good thing. And we could see US dollar go up as a result. But again, most of the benefit here will be in the stock market because that's where all the investors are going right now. And then on Thursday, we have more PMI numbers out of the Eurozone. On Friday, this is going to be a big day. We do have employment numbers from Canada, which doesn't tend to be a huge deal. But if you're trading the Canadian dollars, these will definitely have an impact. And then US here, very, very important. So if we start to see a negative, a drop here, if these numbers come worse than expected, that is going to have a negative impact on the US dollar, and we're likely to see the US dollar drop as a result. So these numbers here will be important because now that as we go into the winter months, we are going to see a bigger impact on the economy than we have seen in the summer months. All right, so that's it in terms of the news. So let's move on to the charts here. We'll start off with euro dollar here. Euro moved up, as we can see, very strong candle here going upwards. So bias here is to the upside. It's looking bullish at the moment, and we are looking at the highs or looking at retesting the highs here. So bias here is bullish, and target would be 1.20, which is not that far. And this is where price has struggled previously. So as we can see here, price has not been able to break this resistance level since 2018. Now, with what we have going on, this one can get broken. So once we see a break, then we could see price go all the way up. So this area here can get filled then. So first target would be 1.20. And only if price goes through that, then we would take a look at the next level at 1.2060 area and then 1.2080 area. So we'll watch that on the daily, but for now, bullish bias 1.20 is the first target. And then we have 1.2080, 1.2050. So bullish bias for euro dollar. Pound dollar here. Pound didn't do so well, so we haven't really seen an agreement being reached here. So Brexit is still going to play a big role with the pound here, and the direction can change very, very rapidly because of the comments that will come out. And so expect a lot of volatility in the pound. We only have a month left before the Brexit is going to happen. So if we cannot see, or if they don't reach an agreement, that will be a mess and that will have a negative impact. So the closer we get to the deadline of December 31st, without an agreement in place, that's not good for a British pound. But any sort of positive comments in regards to them being close to reaching a deal, because they will be working, everybody will be working really hard to reach some sort of a deal, which just makes sense. So any sort of positive comments will have a positive impact on pound, and those comments can shoot pound through into the highs here again. So for now, I'm neutral on this. We'll just have to wait and see how things flow. So right now for the dailies here, last couple of days or the entire week, we see that price has just been trading in this narrow range. So 5 days, it really hasn't gone anywhere. It's back into, it did go up, it's back into where it started. Now, this doesn't quite mean that it will continue to drop, because this could happen. So we may see a pullback, excuse me, right into 1.3275 and then a further move higher. So right now, bias is neutral. We'll watch this 1.303280. If it goes through, then we'll target lower, but this could go higher. So watch out for that. Neutral bias for now for pound dollar. Aussie dollar here, Aussie still moving higher. It's holding on to this, the bullish move here. It went through this resistance level. So price was trading in a range. This is the range it was in, it went through, and now it's holding. So the longer it holds, more bullish it gets. So this is bullish right now. In terms of the target here, we are looking at 1.7420 back into this resistance level, then 1.7500. So bias here is bullish. All right, New Zealand dollar as well. This has been a one-way move here for New Zealand dollar. If you take a look at the weekly, still looking quite bullish. Next target is 7060, which is into this resistance level that we haven't seen since March, but it's still looking quite bullish. So 7060 is the first target, and then we are into 7060 and then 7150. So bullish bias here for the New Zealand dollar. Dollar CAD here, this also, just like the other commodity currencies, making its way in the similar direction. So we're looking for a drop. It's held this level here. It dropped through the support, and now it's holding below, which means we are likely to see a move, further move to the downside. 1.2930 will be the target here. So bias here is bearish, looking for it to come in, test lower here, 1.2930, and then 1.2880 back into these support levels. As we can see, it's just been holding here, and it broke through this support level, and now it's holding. So we'll see. Bias for now is bearish for dollar CAD. Euro pound here, British pound did not do too well, and as a result of that, we saw euro shoot up here, and our weekly. So here's our daily. So as we can see here, price has been going back and forth in this range here. It's been stuck in this range, and that's it. So right now it's close to resistance. If it doesn't go through, we are looking for a move back into the range here. So bias for euro pound for the time being is neutral. Once it goes through this resistance level, then we can look at this next level towards 90.50. But for now, bias is neutral, and it's likely to be neutral because of the what's going on with the Brexit negotiations. But as we can see, it is rejecting the support level. So this is an important support resistance level. Last time price was here, it bounced up. Again, it shot through the roof. Here it is looking a little bullish, but I will not turn bullish on it till it gets out of this range. So once it goes through, then we are looking at 90.65. So for now, neutral, and then we'll keep an eye on this as we go with our daily analysis. All right, so we have a pin bar here. It is into support, so be mindful, but shows rejection. This is every time price has been here, it has dropped. So bias here is neutral to bearish, looking for a move back into the bottom of the range. This is the range that price has been trading in for a number of months now. All summer it's been stuck here. And now that we have a rejection, I will look for a drop back down towards 1.0650. So bias right now is neutral to bearish for Euro Swiss franc, looking for a move back down. Pound Swiss franc here, like I said, pound didn't do too well, and it was also at the top of the range, and now we are seeing a reversal from that. So we have a nice bearish candle close. I will look for price to drop further. First target is 1.1960, and then we're looking for a move back down to fill this candle, 1.1800. So bias here is bearish for pound Swiss franc. However, just an overall warning with any pound crosses here, any sort of agreement, if they actually sign the agreement, we could see pound just take off to the positive side. So it could turn extremely bullish. So watch out for that. There's a lot of there are a lot of eyes on this right now. Expect extreme volatility in the pound into December here. So just watch out. Right now, as we can see, pound Swiss has been trading in a range. It rejected the high, so I'm looking for a drop back down towards the middle of the range here. So bias for now is bearish. Dollar Swiss franc here, this one is bearish. We saw that our US dollar here did not do too well, so this is looking bearish. Nice solid candle close here for the week, so looking for a continuation. Again, this has been trading in a range here as well. This is the overall range actually. Just move some things out of the way. So if we were to move these out of the way, this is the range it's been trading in. It did try to go up, but then failed. And here we are. So looking for a move back down towards 0.8985. So bearish bias here for dollar Swiss franc. Pound yen here. This one also looking bearish here. So this is the daily. As we can see here, this is where price is into resistance here. So right now we have a bit of a pin bar here. There's still bullishness in this, so watch out for that. But bias is neutral to bearish. If it holds below 139, then I'd be looking for a drop here. It can go and retest the high once again. That is a risk, so that's something to keep in mind. But this is the move I'm expecting. And however, the caveat here is any sort of positive news from the Brexit negotiations will send pound higher. So that's the only thing to keep in mind. But as we can see, price is into solid resistance here. It did try to go through once, failed, and now we are retesting. So this is a bit of our head and shoulders pattern here. So if it holds, I'm looking for price to basically, this is why I'm looking for the price to drop here. It's been trading in this range, head and shoulders, so looking for a drop. But again, with pound, I would just be cautious because of Brexit. Euro here, euro does well when pound drops because of the euro-pound relationship there. So this is looking bullish. It has also been trading in this range, as we can see. So bullish bias here. Next target is 125.20. So with this one here as well, price will be into resistance. Last time I was here, it did turn around. So we'll keep an eye on things as they go. So for now, I'm just going to set the target at 125.20 because this could happen there. So for now, bias is bullish. 125.20 is the target. Dollar yen here. Dollar yen hasn't really done all that great. It's been going back and forth in this range here for the last few weeks. It's been stuck here. Now we do have a rejection this week, so I'm looking for a further drop from here. Bias is neutral to bearish here, and this is what I would look for, a pullback and then a drop. Target here is 103.00, so bearish bias for, or neutral to bearish bias for dollar yen. Aussie yen here, this one has been trading in a range. It is right into the top of the range right now. It hasn't gone through yet. So this is the daily chart. As we can see, here we are, right into the resistance. If it doesn't go through, we're looking for a drop back down. So neutral to bullish bias. Once it crosses this though, then we have room higher. So for now, still looking bullish. Next target is 77.70, and then above that 78.40. For the time being though, we'll have to see what happens into this resistance, whether it goes through or not. So bullish bias, neutral to bullish bias here, just with caution. New Zealand yen here, this one has also been holding, as we can see, looking quite bullish here. And it's been out of this resistance level. It's holding above this previous range it was trading in. So it was stuck in this range for quite some time. It made out of this range and now looking bullish still. Next target is 73.60. And should it go through that, we have plenty of room to the upside. 74.65 will be the next one. Do watch out for this important support resistance level, because see how it came into this resistance and then just dropped from there. So we could see a similar response. So just be mindful of the resistance coming up into 73.60 level. CAD yen here, this one has been going back and forth. It hasn't really done much. It's still stuck in this range that it's been trading in. So that's the overall range. As we can see, it's just gone back and forth since May. And right now, we do have a bit of a bullishness in this, but it's very close to the resistance. So keep an eye on it. I would say neutral bias for the time being, and we'll monitor it further on our daily. If it doesn't go through 80.50, we're looking for a drop back down there. So neutral bias here for CAD yen. And CAD yen will be impacted by OPEC meetings as well. So just be aware of that. All right, so let's take a look at our gold and silver here. Starting off with silver, this is looking bearish. It's been stuck in this range for some time now and still looking bearish here. It is into support though. So if it doesn't break through the support, we are going back in, right? Watch out for that. For now, it is bearish though, with caution. Once it goes through, next target is 21.65, and then we have a lot of room here, this inefficient move that will get filled. So for now, I would say bias is bearish. 21.65 is the first target, and then 20.50 will be the second target. So bearish bias for silver with caution. Gold here, gold dropping, and markets seem to be, very happy right now, very optimistic, which is not good for safe haven assets like gold and silver, yen, Swiss franc, and US dollar. Hence, we have seen a drop in all of those. So with this one here, still looking bearish. First target would be 1760 and then 1725. So bearish bias for gold here. Oil here, oil looking bullish now with all the positive sentiment, with the vaccines being introduced. All of that is positive. Markets are seeing that, stock market is seeing that as a positive sign. And when stock markets are doing well, so our oil is also going to follow along, because once the economies open up, the demand for oil will go back up, at least to normal levels. So this is looking bullish. It's broken through this resistance level where it was stuck for quite some time. So still looking bullish. Next target is 48.70. So back into this level here. And of course, if it does go through, then there's this big candle that could get filled. So for now, bias is bullish, 48.70. And then we'll say back into this level for 51.30. So bullish bias for oil. Copper here, copper looking extremely bullish here. It's gone through these highs here, and these since 2014, these were the highs from we haven't seen at least anything higher since 2014. So this is looking quite bullish right now. So bias still is bullish. In terms of our targets here, we'll just have to come up with our own. So I would say 3.40. From a weekly perspective, that will be the next target here, but looking quite bullish. Bitcoin here, Bitcoin dropping a little bit, which is to be expected. It was into this all-time high back from November of 2017. So it reached there again. Quite a big move up, just like it did last time. And now we are seeing a drop from there. So I don't have the weekend price action here, but we may see price go sideways here. Right now, my bias will be more on the neutral side. I'm not extremely bearish on this, but it may just go sideways in this little range. So it may get range bound like this for a bit. So watch out for that. So my bias for the time being is neutral. Once it drops through here, then we've got lower levels that we can target. So again, we will monitor it on the daily. Right now, bias is neutral. Stock market still looking bullish. We are at all-time highs right now. This entire drop got filled and then some. So right now markets are looking bullish, which means we are looking at retargeting the highs, 3675 and then 3700. So bullish bias for S&P 500. NASDAQ here also looking bullish. And in terms of our targets, we're looking at the highs again, 12,400. It's a bullish bias here for NASDAQ as well. Dow Jones also looking extremely bullish. It held above the support resistance level. Now it hasn't quite gone through the high, but it's there. So still looking bullish. Target is 30,500. And then DAX here, DAX also looking bullish here. And in terms of our targets, first target is 13,450 and then 13,770. So this is bullish as well. Everything here. So with Footsie here, Footsie's been trading in this range. It's been going just going sideways here. Now for the week, we had a nice bullish candle close. So I would expect to move higher back towards 64.60. So Footsie is also looking bullish. And Nikkei going through all kinds of highs here, extremely bullish. Next target here would be 27 to 27,000. So bullish bias for Nikkei as well. So looks like in spite of what's going on with COVID, with everything else, the stock market is loving it because of all the support the governments are providing, with all the money flowing into the businesses and so forth. So there is an optimistic sentiment out there, so very positive sentiment, and we'll continue to monitor it. So that's it for today. You guys have a wonderful trading week, and I'll be back again tomorrow with the daily analysis. Bye for now.